What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 3 weekly pay ETFs that I'm going to try to get to 100 shares, maybe even more. This will help me out with a pretty good distribution day to help turbocharge my dividend portfolio. Now, I made some changes, as I told you. And again, I'm going to explain this real quick because people are thinking I'm buying high, selling low. That was not the purpose. I have never done that. I have tax loss harvested. I've lost a decent amount with BITO, which I'll rebuy in 30 days because it'll probably, again, it's a tax loss harvest effect. I've done that before. I've, again, I wouldn't be in this situation if I've made some tax loss harvest situations to turbocharge my dividend portfolio. So again, need to look at these weekly payers, monthly payers, quarterly payers to really get this portfolio going. And these 3 weekly payers are going to help me get to that point. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these 3 ETFs that pay weekly that I will be buying right now. One of them that I will be targeting and buying is the Rex NVDA Growth and Income ETF. So yes, I like NVIDIA. This is a good one that has, again, NVIDIA is a really good stock. I own a lot of shares of NVIDIA, more than $10,000 in NVIDIA. I will be holding. Yes, and I did buy low, and I will sell high eventually with NVIDIA. I'm going to hold that for a long time. So, need to focus on the growth and income ETF because NVIDIA is a good stock and it'll help get my dividend portfolio a little bit turbocharged. So we're going to jump to that. So it has a distribution rate of 42.76%. You have to be careful with that. Again, the most recent distribution was 97.70% estimated return of capital for that week. So that's good. We have to watch the expense ratio of 0.99%. So right here, the fund strategy involves a daily leverage exposure between 1.05 times and 1.50 times of NVDA. And again, there's a risk with this one. This is why I tell you guys don't buy things because I buy things. The NAV has done really well. Again, the objective, half of the uncapped upside potential, half of the weekly income via cover call strategy for balanced growth and income. So this one you have to be really careful for. Again, these leveraged ETFs, again, look at this, is to seek daily investment results before fees and expenses between 105% and 150% of the daily percentage of the common stock of NVIDIA. So you have to be careful with that. So again, the distribution weekly is not bad. 27, 27, 18, 19, 17. Still, pretty good distribution. You have a return on capital that's not too bad. So I'm starting to buy this, maybe get to 200 shares or so. Think about that distribution, $40 weekly. That's the thought process in my mind. If I get to NVII, that's going to be a good distribution. Again, NVIDIA is a strong growth stock, so I'm going to take the risk with that. So what happens? Now, let's jump to the next one. Now, before the Magnificent Seven starts blowing up again, I'm going to capitalize on Maggie, the Roundhill Magnificent Seven covered call ETF. It's sitting at 46.92. So here's the thing, and I'll go over them on the website. The Roundhill Magnificent 7 covered call ETF implements a covered call strategy on the Mag 7 stocks. The fund offers exposure to the Magnificent Seven, subject to a cap, while providing the potential for current income. An actively managed ETF. So right here, it seeks to generate weekly income through a covered call strategy on the Roundhill Magnificent 7 ETF. Implements a covered call strategy, saving investors time and expense of trading options themselves. So we have a net expense ratio of 0.99%. And I'll jump to the Roundhill Magnificent 7 ETF shortly. So it does pretty much calls on that. Distributions are not bad. It's 29.81%, a little bit more conservative. You have 20s, it's pretty 20s, 30s is not bad. So that's a pretty decent number. Okay. So I'll take that 20s and 30s. Okay. Now look at MAGS. It's starting to gain some momentum, it's starting to get back up there. So we have an opportunity with this to get weekly income with the Magnificent Seven starting to take off again. Okay, here's the year to date. It's been up 6.2%. Past 5 years, it's up 176.98%. In theory, and again, there's no promises, no guarantees, this goes up, this will help with Maggie. Now, Maggie is for income. It's not going to beat the Magnificent 7 ETF. Don't even think about it. It's not going to beat the Magnificent 7 ETF. It is for income. So when the Mag 7 ETF goes up, it usually goes up. So that's a thing that's promising with this ETF. Now I'm going to jump to the final ETF. I'm going to go into blocks. It's sitting at 1785. It's an actively managed ETF. It gives the investors the opportunity to have exposure to Bitcoin. And I'm going to go a little bit into detail with them. I think this one, again, not financial advice. This one has a serious opportunity. And this thing with Bitcoin, is it asset? What is it? We're going to find out very soon. If Bitcoin soars, this will soar. If Bitcoin soars, HOII will probably do well because of Robinhood and cryptocurrency. Now, it doesn't invest directly into Bitcoin. It goes into Bitcoin and Ether. Okay, right here, the ETP, exchange traded products, and the crypto industry companies to generate weekly income. So we have to know, again, we have an expense ratio of 0.99%. We have to know what's, and here's the distribution, okay, 10 cents, 11 cents. That's not bad. So 10 cents, 11 cents, but the holdings are the important thing. Right now, here's their holding. Hut 8 Corp, Riot Platforms, IREN, VanEck Bitcoin ETF, Taiwan Semiconductor Manufacturing, iShares Ethereum Trust, Fidelity Wise, Origin Bitcoin Fund, Galaxy Digital, Cipher Digital, okay, the Nicholas Bitcoin and Treasuries After Dark ETF. So we have some, actually a pretty high percentage of some holdings. I'm going to go a little bit more into this. We have some NVIDIA right here, 5.44%, Coinbase at 2.89%, Mara's at 1.56%, MSTR is at 0.7%. So it does have some pretty decent companies. But we have to be, and then it has Robinhood. Maybe Robinhood will take off. Maybe. That's not that's not guaranteed. But I'm going to take the risk of using my passive income to reinvest and buy some more. Because one, I need to start earning more weekly income. Two, my weekly income needs to start buying the dividend growers. And three, dividend growth always wins. So these are going to be my targets for a little bit. Again, distributions at different times, something that I feel very confident with some moves. Don't do this because it could blow up in your face, but that income, $20 a week with some of these weekly pay to, that would be beautiful. Income from NVII, income from Maggie, that would be beautiful to help turbocharge my dividend portfolio with a pretty decent distribution schedule. So I'll take the risk. Again, we will be rebuying certain things. Again, I will be buying my quarterly dividends. I want to generate a lot of money with my quarterlies. That's a long term. I don't, these ones I'm not relying on them. Maybe short term if I really need money, but I don't, I shouldn't be relying on these. Dividend growth always wins. I just want to be clear. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I will have a video for you tomorrow. Take care and have a good one. And I'm going to have this video tomorrow, a new video for you tomorrow. And make sure you check out my disclaimer in the beginning. Don't use this YouTube channel for financial advice. Don't use this YouTube channel for tax advice. Take care.